Welcome back to the Dividend Diplomats YouTube channel, guys. You've got your favorite bros skis here, the Dividend Investors, the one, the only, Bert, the Hurt, and Lanny, the DD guys. It's time to jump in. The little hot topic right now in retail and even politically.
Before we jump in, everyone, let's subscribe to this channel. Give this video a thumbs up. We are on the doorstep of crossing 17,000 subscribers, everybody. And soon, of course, we want to get to 20,000 too. But let's take a small step, a baby step, and not cross this video past 17K. So, Lanny, what's up? What's on the mind today?
Well, guys, so by the way, we're recording this here on a Tuesday night. Hope everybody did have a great Memorial Day. Let us know in the comments if you were eager not just to eat and grill out, but to buy dividend stocks on Tuesday morning. We're recording this here a little after 10 o'clock Eastern time here on the 30th. And guys, it's no joke that Target stock, ticker symbol TGT, has been in the news, in the press, really related to their, LGBTQ plus initiatives right now, really related to their product in the stores and what they ended up doing with that certain product for Pride Month coming up here in June. And obviously, there are a lot of, diverse, feedback from customers. And, fast forward, that stock price has dropped tremendously, not just below 140, but currently below 135 at $133.84 to Target stock, as if all the inventory concerns that they had earlier in the last 12 months, which I think they finally figured out, as you saw in the last video that, Bert put out there. Now they have this big ticket item.
And yes, and that's the reality of it is we're not here to opine and give opinions on where anything stands. That's not really the point of it. But the unique thing when situations like this come up is they can present potential buying opportunities for great undervalued stocks that were trading one time at a premium that have faced some headwinds because of actions the company's taking. Another example of where this has come up in the past is a decade ago, BP with the oil spills. Obviously, that was a terrible topic and a terrible thing would happen, but there were a lot of investors that bought stock during that time that might be reaping some of the benefits from it later. It's one of the side effects and something that has to be discovered, especially when you're talking about a stock like Target that is a dividend king nonetheless.
Guys, yeah, so Target is a dividend king. So what does that mean? They've grown dividends for over 50 years straight without missing a beat. They've gone through all sorts of changes in the world, the economy, pandemic, recession, you name it, they've done it, they've been through it. And is this just another blip or block in the road that they, bump over? I remember obviously the Amazon Walmart wars at one point that sent Target stock tumbling. We were there to scoop up a bunch of shares. So again, not saying what Bert said, what side of the fence we're on this topic or issue, but stock prices pummeled. The biggest recent one kind of relates to Norfolk Southern with the train derailments. That stock price tumbled. Unfortunate, but from an investor standpoint, is there still value there? It's still fundamentally sound. But so guys, what did happen though? Again, they had product in the stores, and apparently customers were threatening employees, posting social media videos, talking, belligerent language regarding what was being sold and where it was located within the store. So Target, as they say, out of protection for their employees and to keep a safer workplace, changed up where the product was located in some stores. They're saying within the southern area of the United States, as well as possibly even removed some merchandise from their stores as the Pride Month approaches here. Essentially when you're watching this will be June 1st. So
yeah, it's incredible. There's nothing more to really say to it than it's just it's a situation, but that's where we have to ask ourselves, obviously, as they work through the headwinds, what do we make of the stock today? What are we thinking about it? So that's where I think one of the things that we're going to do, we're going to run the company through our Dividend Diplomats dividend stock screener. we're going to focus on three metrics here: price to earnings ratio less than the S&P 500, two, payout ratio of less than 60%, three, history of increasing dividends, where you look at the 5-year average dividend growth rate and how many years in a row the company has increased its dividend, and lastly, that bonus metric, the dividend yield. But I think there's a little extra flavor of something that we're going to have in store for this stock screener that we're not going to do, that we haven't really done in the past, but it's going to be very relevant, especially with a lot of the negative headwinds that we're facing. Lenny, you want to tell everyone about that extra step here for Target?
Yeah, so as Bert indicated, we're going to look at it normally, but then we're going to shock what analysts are expecting. Yeah, so everybody in the finance world understands doing a shock scenario here, especially if you're a banker in banking, you know what shock scenarios are. We're going to shock the analyst earnings per share by 25% downward. And we're going to look at the price to earnings, the payout ratio, and everything through that lens, comparing it as well to the S&P 500 and their big brother, Walmart WMT. So we're going to go through the metrics, and then we're going to compare it at the end as well if that earnings per share drops by 25%, which I don't know about you, Bert, but I think that's a very much a close to worst case scenario.
Yeah, I'd say that's very conservative, because no matter what happens with headwinds in sales, a 25% drop in earnings would be astounding based on the current events alone. So that's where it'll give you a good picture. And this is why we think investing in dividend kings and dividend aristocrats are so great, because they've survived headwinds before. They've survived downturns and sudden drops in earnings. They're built for this, but we're going to see how Target performs through this shock analysis. I think it's a really cool feature that we're adding into this with what's going on.
So let's dive in, guys. That first price to earnings ratio. Again, analysts currently expect $8.36. So untouched, with Target trading at $133.84. Their PE ratio is 16 times earnings, which is less than Walmart's PEs of about 23, and S&P 500's PE now, which is at 24 times earnings.
Interesting. It's very interesting seeing that, because I feel like it's been higher than that for a while. Obviously, when there's a big drop in price, it's going to come down. So look at that payout ratio, though. Let's keep going through the current metrics, not the shock analysis. We'll keep going through the current one. Annual dividends, $4.32. That gives you a payout ratio of 51.67%.
Yeah, so smack dead in the middle. Remember, we like that 40 to 60%, so they can continue to grow, adjust, be flexible with their business, but obviously reward the shareholder. So right there, it's 51 years of growing dividends, guys, to get in the growth rate. Obviously, the average dividend growth rate is going to look a little high right now at 12, a little over 12% for Target. Do we really think that that's going to continue to happen after this very difficult time period? Well, I'll go with, who knows? Obviously, their last year dividend was a massive increase of 20%, but we think it's going to be more than likely much far less than that this year.
Yeah, I just would say, yeah, there's nothing more to really say. All right, then let's look at the dividend yield. Obviously, with the price decrease that we've experienced, their yield is at 3.23%. So it's well above 3% now. It's cleared that important hurdle, and it's taken a few steps past that hurdle too.
Yeah, cross that 3% hurdle, as Bert indicated.
Yeah.
And just to go back to the growth rate on Target, they had a few years again where it was about 3% increases, 3 to 4% increases leading up to the pandemic. And then they really started chomping at their dividend growth.
Yeah,
Just keep that in mind, that it's not going to be the first time they've had lower dividend growth for a period.
Yep. So let's summarize here the metrics. Let's go through them. PE ratio 16, payout ratio 51%, 12% 5-year dividend growth rate. They've increased that dividend for 51 plus years with that 3.23% yield. But Lanny, you know what? For the crowd, as we said we were going to do before, let's blast the stone cold music. Let's see him come sprinting down the ramp, and let's shock everything that's in the ring. Let's cut Target's earnings by 25% and see how they perform in those first two metrics of our series.
Right, so we're going to quickly go through this, but guys, that $8.36 earnings per share expected goes down to $6.27. The PE ratio still gets up to 21.35, still below Walmart, still below the S&P 500. And then the dividend payout ratio with the shock to 25% goes from 51.67% all the way up to 69%. Above the 60% ceiling, but at the same time, not too terrible. I think we've seen many other companies have higher payout ratios that are dividend kings. Procter and Gamble have been there quite a few times.
I would very much agree with that sentiment. And it's really assuring knowing that this is a very conservative worst case scenario, that the company, you look at it in the screen and you're like, oh, it's still not bad. In the worst case, the best case, which is what we're staring at right now, the stock appears to be undervalued. And that's the reason why we look at these companies through the screener, despite the negative news and the negative headwinds that it's facing.
And again, the remaining metrics stayed the same. The dividend growth rate's the same. Dividend yield stays the same. So we're not shocking the share price here on you guys.
You can't predict what's going to happen in the stock price, so it's worth just keeping it there for this.
So guys, what are you thinking about Target stock? Have you been buying the stock on Tuesday, the day after Memorial Day? Did you buy it Wednesday? Let us know in the comments. Obviously, it's June 1st right now when you guys are watching this, so unsure of what's actually unfolded on May 31st.
Right, let's see if there's a nice end of May surprise for us. And just remember, everybody, if you haven't already, subscribe to the channel. Give this video a thumbs up. And just remember, we keep investing, keep pushing so we can all reach financial freedom together.
Yeah, again, guys, the dividend king we're talking about, not some Joe Schmo off the sidewalks here to get into your portfolio. And Bert, gosh, what's that last thing? Oh, if you're not with us, guys, you are against us. That was Bert, the Hurt, and Lanny from the Dividend Diplomats. Over and out.